conference will now be recorded.
Very good evening to all the students present for today's session. Am I audible to all of you? One of you can just confirm.
Yes, ma'am.
Yes, ma'am. Yes, ma'am.
Okay, fine. So yesterday we were in the middle of Bangalore Cafe case. Please open the Bangalore Cafe case study as well as the workbook. Are you ready? So I will also share the screen with you. Yeah. So we had done till the we had entered details on quantity and price. Now we'll further up to the annual sales. Okay. Now annual sales, as I've told you, 2019 is a zero year. So for that year, you need not compute the annual sales. You have to start from 2020. Okay. So what you're supposed to do is you have to start from 2020. So here it has been given as a daily sales. Yes. So what you're supposed to do here equals to price into, sorry, quantity into price into, what will you give? It has to be 365 because it is on a daily basis what information has been given. Okay. The same thing goes with here, equals to quantity into price, sorry, into 365, into 365. Again for Maggie, equals to quantity price into 365. For puffs, quantity into 365. Shakes, equals to quantity into price into 365. Okay, so for the rest of the years, you're going to do it and then get the total values. Okay, so please complete this annual sales. And total annual sales, use your sum function, equals to sum So please complete it. Yes, are you done?
Yes, ma'am.
Yeah. Now the next one is online aggregators and retail sales. So what is this? Let me explain you in detail. See, by here, come back to your case study. See here. Now, after this is discussed, to operate the cafe, it needs to have 450 square feet for the retail shop with a lease rental of 150 per square feet per month, and the rental contract totally is for 5 years. The deposit amount is 10 lakh at the start. That is the usual case. After that, there is a point. Online aggregators account for 40% of the total sales. Online aggregators account for 40% of total sales. So your online aggregators comprise of Swiggy, Zomato, and all your online food apps. Okay, you can take Swiggy, Zomato, and anyone. Okay, Magic Pen, and so many other. Right? So, see, when it comes to your hotel business or in any kind of business, we have two segments. One is a retail sale, second is an online sale. Okay, in every segment it is there. Now, what is the retail sale? Retail sale is for the walk in customers, what sales are made, that accounts for retail sales. Now here in this case, cafe, okay, Bangalore cafe case, the customers who walk into the cafe, have food, pay the bills, those transactions are called as retail sales. Is that clear? But when you're booking through Swiggy, Zomato, or any other online websites, through these websites, okay, from this cafe, that is nothing but online sales. Okay, so and you have the two main people here, Swiggy and Zomato. Now, so out of the total sales made by this cafe, 40% of the total sales is nothing but online sales. Remaining 60% is the retail sales. I'll repeat it again. Total sales made by Sumit out of this cafe is 100%. Out of that 100%, 40% accounts for online sales, 60% accounts for retail sales. That's what is being given here. Online aggregators account for 40% of the total sales. And to take that delivery, to make these deliveries, online aggregators charge a commission of 30% of the total sales. That second line we'll take care later. Now let us uh, focus on this proportion of online aggregators out of the total sales. Okay, so let's go back to the Excel workbook. See here. Now, I hope all of you have got this total annual sales, the same amount. Okay, now see, we have here two online aggregators and retail sales. So, how we are going to consider the proportion for online aggregators equals to total sales into 40%, because 40% is online sales. Retail sales is remaining 60%. You can take remaining 60, or you can just minus the annual sales, total sales minus online sales. Anyhow, you can do it. 60%. That's all. So this is how you're going to get. If you want, you can round it off, which I've already taught you. Otherwise, if you leave it like that, also no harm. Okay, it won't disturb your final result. See. Please do the calculation. Yes, are you done?
Yes,
Okay.
ma'am.
So, yeah. Now, after calculating the online aggregators and the retail sales, next we go for the computation of all these expenses: rent, salaries, commission, interest expenses, and the food cost. So here, now rental expenses. Yeah, coming back to the case study. Yeah. Now, what does rent say? Just same as your pharmacy case. To operate this cafe, it needs to have a total space of 450 square feet for the retail shop with a lease rental of 150 rupees per square feet per month. So, I come to the rent expenses. So, total space required is 450 square feet, and per square feet, the landlord is charging 150 rupees, that too per month. So, into 12 months. So total rent comes up to 8 lakh 10, which is the same for all the 5 years. So please compute the rent, and then I will start the rest.
Done, ma'am.
Okay. Next is salaries. Coming to salaries again. Yeah. What it says. Salaries, you have to come to the second paragraph. It says salary inflation. Inflation means what? Increase in the salary is 7%. So salary inflation in the economy is 7%. But before that, what is the total salary to be paid by Sumit for the staff? That we have to consider. So let's scroll down and come to the appendix. Yeah. So the initial stage we had discussed is right personal cost per month, the staff requirement, and the total salary to be paid every month. Okay, it's already here. So per month, so for manager 20,000, cooking staff for 3 members 15, for the cleaner for 12,000, and for the others it is 18,000. So go back to your Excel workbook. Here only I've given you the table for your working. See here towards the right if you observe. Okay. So per month manager 20, cooking staff for each member 15, cleaning for 12,000 for one person, and for to take care of the other work, okay, one person is required, and for him 18,000 is being paid. So total it comes up to 95,000. Okay, so you need not sit and calculate the total amount. So here it's already there for you. So what you can do is for the first year equals to 95,000 into 12 months, because that is per month calculation. Is that clear? That's a per month calculation, so you have to convert it into the annual calculation, okay, which you have to do it there. And now what it is being said, it is being said that 7% there is an increase, okay, increase in the salary. So same thing how you have been doing for all this time, equals to the base salary into 1 plus 7%. Okay, and for the rest of the years. This is how the salary has been computed. Okay, so I hope it's done. Next we move on for is commission. So coming back to the commission, I go back to the case study here. It says, see here, online aggregators who are Swiggy and Zomato charge a commission of 30% of the on the total sales. Online aggregators charge a commission of 30% on the total sales. So now they are offering their services for this cafe. So they will charge a commission for the total sales what they make. Now you are going to tell me this commission, he says 30% on the total sales. So how will you compute this commission for these online aggregators? I want the answer from your side. On which will you calculate 30%?
Ma'am, on the retail sales.
On the retail sales?
Total annual sales.
Total annual sales. Then total annual sales or the retail sales?
I think annual, ma'am.
Annual. Okay. Now, yeah. Who are the online aggregators? Online aggregators are Swiggy, Zomato, and all these people, right? Now, what kind of sales are these people doing for the cafe? They are doing online sales for this cafe. Now, if commission has to be paid for the Swiggy and Zomato uh, people, okay, can commission be paid on the total sales? No. Commission has to be calculated on the sales what they make for the cafe, which means this 30% commission is calculated on the basis of the sales what these people make for the cafe. I'll repeat again. Total annual sales comprises of both the retail sales and the online sales. Now, as I've explained to you earlier, what is retail sales? For the walk-in customers, what services are offered, that becomes the retail sales. Okay, what is online sales? Moment you book through Swiggy, Zomato, and you get your food delivered, that is an online sales. So now, Swiggy and Zomato, okay, who are the delivery partners for the Bangalore Cafe, they charge a commission of 30% on the sales what they make, on the total sales. Now, the total sales, you cannot take the total annual sales. You should take the sales what Swiggy and Zomato mm, uh, do for the cafe, which is nothing but online sales. Because in that total annual sales, you have the retail sales as well. Now, they don't have any rights to charge commission on the retail sales because they're nowhere connected with that. They're only connected with the online sales. So that's why I asked you this question: how will you compute the commission? So commission of 30% is calculated on the total online sales made by Swiggy and Zomato. This one. Is that clear? So equals to online sales into 30%. That's all. So this is a commission what is being given to them. Yes, please compute the commission.
Ma'am, can you calculate salary once again?
Salary. We have not got salary.
No, ma'am.
Yeah. Salary is nothing but equals to, take the total salary which has been put up here. See here, towards the right hand side, you can just use the bottom scroll, horizontal scroll bar. See, I have given you the details here, right? So the total salary per month to be paid to the staff has already been calculated for you here, 95,000. 95,000 is the total salary to be paid for all these staff for 1 month. So what you're supposed to do is here, what you're supposed to do is equals to 95,000 into 12 months. That's all. And then every month there is an increase of 7%, which is being given in the case study, right? So salary inflation in the economy is 7%. Now the staff will not keep quiet on the same salary to be received every year. Of course, all of us will experience, will require an increment in the salary, yes. So that time for 2021, what you're supposed to do is equals to this 11,40,000 into 1 plus 7%, and then you get the increase in salary from 21 onwards, and from there you're just going to drag it for the rest. Okay.
Got it, ma'am.
Yeah. So please do also complete the commission calculation, and then I'll do the interest expense and the food cost. I hope you're done.
Yes, ma'am.
Yeah. So next we move on to the interest expenses. Now interest expenses, yeah. Now, what is the total amount required to start up this cafe? In the Excel workbook only I've given towards the right hand side. Okay. Now, a deposit of 10 lakh has to be paid, plus a renovation cost of 15 lakh is there. 15 lakh of amount has to be spent to renovate the premises, plus 10 lakh of deposit to occupy that space. So total investment required is 25 lakh. Here also you can see in the case study as well. See, a one-time renovation of the premises worth 15 lakh will need to be incurred at the start, plus a deposit of 10 lakh has to be made to occupy this space. So total deposit plus renovation is funded by 20% of the bank loan at 12% interest rate. Yes. So the total amount required to start up this cafe, total investment required is 25 lakh. So out of this 25 lakh, how much has been sanctioned by the bank? 20% is being sanctioned by the bank. Remaining has to be funded by raising equity, okay, or through equity shares. So here we have to compute the interest on this bank loan of 20%. So how you're going to do here? Coming to the interest expenses equals to, what is the total amount? Total investment was 25 lakhs, out of which 20% is being sanctioned by the bank. For you, it has already been given here. See, debt is nothing but the total amount sanctioned by the bank. Remaining is raised by equity. Okay. So here you can take this 5 lakh directly, which I have given it to you here. Okay. Into 12% is the interest rate charged. So the interest expense is 60,000. I'll repeat again. Equals to 20% of 25 lakh is 5 lakh. Total investment required is 25, out of which bank sanctions only 20% of the total investment, which comes up to 5 lakhs. So here, how do we compute the interest is equals to 5 lakh into 12%. That's how 60,000 is the interest. So that hold it and drag it for the all the years. So you hold it and drag it, what happens? It will come 0, 0, 0, 0, 0. No issues. Just freeze M10, because why here we have to freeze here M10 is I've taken the cell reference directly here. Exactly, yeah. So here you're just going to freeze by using which key? It is very good. It is F4. I hope you have not forgotten that it is F4. Okay, that's it. So compute the interest expenses and then I'll talk about the food. Or I'll do one thing, I'll just discuss the food also. Together you can compute off. So food is nothing but, you can just see here. After that, both together you can finish. Yes. See, after the salary inflation in the economy of 7%, food expenses are expected to be 35% of the contribution. Okay. Food expenses means it could be packing expenses, packing materials are required, overall. Okay. The expenses incurred. Okay. So that is expected to be 35% of contribution. As I've told you in the initial stage, contribution in your FM language is sales. So food expenses are expected to be 35% of the contribution, which means 35% of the sales accounts for these food expenses. Now, again, a question is asked to you. 35% of the sales accounts for food expenses. Now, which sales will you opt in this case?
Annual sales, no, ma'am.
Which one?
Annual sales.
Retail
Okay.
sales.
Retail sales, online sales, or total annual sales?
Total annual sales, no, ma'am.
Then I mean, I think I got one answer as retail sales.
Total sales.
Okay, very good. So, see whether an online sale is being provided, whether a retail sale is being provided by the cafe. Expenses are common, right? Right. Whether you take online or whether you take a retail sales, expenses are incurred by the cafe itself, irrespective of the type of sale, irrespective of the nature of sale, right? So these food expenses are calculated as 35% of the total annual sales, not on the online nor on the what do you say, the retail sales. So 35% is computed on the basis of total annual sales. Okay, so coming back to your Excel workbook, equals to your total sales into 35%. That's it. And for the rest, just compute it. So these two you complete, and then we're going to sum up everything. Yes, are you done?
Yes,
Food
ma'am.
cost. Yeah. Now, please sum up these expenses. Okay, see a row is not been given. Immediately we have the PBT calculation. You can add a row here. I think I've taught you in the previous pharmacy case as well. So you come to row 33. Okay, just come to row 33. Okay, so you can just see here row 33. Just right click on row 33 and just select insert. I think it is correct. One second. I think you should go for 34. Please go to 34. Go to row 34, right click on 34 and just give it as insert. Yes. Okay, I'll repeat again. Go to that PBT row, 34 row, right click on that and just click on insert. You get one additional row there. And then just put up there as total expenses in caps if you want. Total expenses. Okay. Now using your sum function, you're going to compute it. So please sum up all the expenses. So this should be your total expenses.
Ma'am, can you show the formula for food cost?
Food cost for formula. For food cost formula, what you're supposed to do is for 2020, your first year equals to, okay, take your total annual sales. Your annual sales is what? Total annual sales. You first select that amount into 35%. 1 second, it's buffering here. That's why I dictated you. Equals to total annual sales into 35%. Don't take your online or any other sales. Yes, see.
Yes, I
Save
got
this.
it.
So please compute the total expenses. I've highlighted here. So once you've done with the total expenses, next is your PBT, profit before tax. So how do you compute your PBT? Equals to your sales minus expenses. Remember your multi-step income statement which you've done, including your recent pharmacy case. Total sales minus total expenses. So equals to total annual sales minus total expenses. That's how you arrive at your PBT. And after you arrive at your PBT, calculate the tax. Your tax comes up to which amount? See here, tax is how much? The tax rate in the economy is 35%. So equals to PBT into 35%. That's all. equals to PBT into 35%. What is PBT? Profit before tax. So you're going to compute the tax rate on your PBT equals to PBT into 35%. You get the tax amount here, and then for the rest of the years also you're going to compute it. And then final amount, profit after tax, equals to profit before tax minus tax amount. You get your profit after tax. So complete this table. I'll give you time, finish it off. PBT, tax and PAT computation. Yes, are you done?
Yes, ma'am.
Right. I hope you've got the same answer, PAT. In case if you have any doubts, you can let me know. Now you come to the cash flow calculation at the bottom. Okay. Now this cash flow calculation, okay, here is what we have to do it. Now what is the initial investment required to start up this cafe? Around 25 lakhs is required to start up this cafe. Yes. So which means, as I've told you, 2019 is your 0 year, equals to minus 25 lakhs. Okay. Now what was the debt raised, in the sense how much loan was sanctioned by the bank? 5 lakhs was sanctioned. So in the year 0, equals to 5 lakhs. And when was the debt repaid? By the end of the 5th year, 24. So what you do is equals to minus 5 lakhs. Next. The third case, deposit refund. Now by the end of the 5th year, we are going to get the deposit back. So you have to go to directly 2024, how you did your pharmacy case. What was the deposit amount? 10 lakhs. And please paste your PATs here, equals to 420 for the rest. And for the rest. And compute the net cash flows, equals to sum. Take all the 4 cells into consideration, sum of inflows and the outflows, and then for the rest. So please complete this cash flow calculation, then I'll come to the IRR.
Dharma.
Okay. So now your IRR calculation equals to IRR. So your sum of all your cash flows. And so 21%. So it's a good one to invest in this project. So you should be able to get 21% as your IRR. Please compute the IRR. Hope all of you have got the IRR computation as 21%. Okay, so now we have come to the end of the second case study, which is your Bangalore Cafe case study. Okay, so yeah, see here, the last para. Evaluate the business opportunity with a projected life of 5 years, which you have done. After 5 years, this cafe will be sold to big brand and the deposit will be refunded to Sumit, which you have already calculated. Should Sumit invest in the above project? So now you have to give the answer whether he should invest or not. Yes, he can invest in this project. Okay, he may think of investing because IRR is not also too less to not to be considered. So Sumit can invest in this project and can run this project with a reasonable amount of returns. Okay, so I hope this is clear for you. Now I've sent one more case study in the WhatsApp group already. Okay, so please open that. It is Volvo model explanation. Don't worry, I won't be starting on a full shot. I would request you all to please go through the case study for around 5 to 10 minutes. We'll not be solving off today. I'll just give you 5 to 10 minutes. Please go through the case study. So each case study is different. It is not the same. Okay. So please take time. Please go through this case study. Volvo bus. Yes. So please go through the case study. So it's a Volvo bus case. Okay, and yes, see, here we are talking about the bus, a single bus which is made by the Volvo. Okay, so here this is not like the ordinary case or a similar case. Okay, it is slightly it is different. Okay, so here, as I've told you, when you read a couple of times, you get to understand the complete case study. Just by reading once or twice, you'll not understand to a large extent. Okay, so now once you go through this case study in detail, you'll be able to put up the details in your workbook here. Okay, which I've already given you. I think the Excel workbook has already been given to you. Okay, so here I'll just read across the case study. Cost assumed here is taken for a single bus made by Volvo. The actual bus costs around 70 lakhs. So the cost of the bus is around 70 lakhs. However, along with the vehicle, there are some additional charges. Registration of the bus, insurance, taxes, etc. So total cost of the bus comes around 70 lakhs. In addition to the cost of the bus, other charges also exist like registration, insurance, taxes, etc. Since the bus will be used for hiring purpose, we leave some margin for the accessories that might get added to it. Okay, and some amount will have to be spent on acquiring the All India permit to use the bus for transportation purposes. So all this you will be aware, right? So an All India permit has to be acquired for the transportation purposes, and of course it is Since it is used for hiring purposes, some additional accessories are also required for the bus. So these additional expenses could go up to 5 lakhs. So we told that some accessories need to be attached for the bus, and these additional expenses can go up to 5 lakhs, and the company can incur 10% maintenance cost on the bus on the revenue of that year. So I'll repeat again, company can incur 10% maintenance cost on the bus on the revenue of that year with the escalation rate of 15% yearly. So every year post the first year, there will be an increase in the maintenance cost of 15%. Due to excessive usage of the bus, it is assumed that the life of the bus will be only for 4 years. So the total life of the bus comes for 4 years. The income tax department follows a straight line method of depreciation. Okay, so what is straight line method of depreciation? Any answer? We have so many methods of depreciation, right? So what is
Same
a
for
straight
The depreciation,
hmm,
the
depreciation?
depreciation stays the same for all the years.
Very good. So the depreciation amount remains the same for all the years. Okay. Now, however, looking at the working conditions and usages, we assume a useful life of the bus of 4 years. Okay. So now what you're going to do is, now till here I have read, okay, fine. The remaining also I will read it now. The company couldn't purchase the bus through its own cash reserves. Now, total amount required was 70 lakhs and plus the additional charges for registration, insurance, taxes, and everything. So, company couldn't purchase the bus through its own cash reserves. It needed the help from the bank, and the company took loan of 75% of the total cost of the bus. So the bank approves how much? 75% of total cost of the bus. The bank, however, charged an interest rate of 15%, where the tenure of loan is 4 years only. Interest rate value, if expected to be high as the company needs to finance the bus, the bank can charge interest rate of 15% and next class. Okay, that is tomorrow's class. Okay, so it's very easy. So slowly you have to take this case. So don't gulp it in one go. It'll be very easy to work. Okay, so I bring an end to the session. So see you up in the next class. Thank you all.